normally expect is you'd normally expect the FTSE to be on a discount. The FTSE wasn't on a discount at that stage. The FTSE was on a small premium. So based on the fact that you're selling this, you're expecting the FTSE to start generating a little bit more of a premium, and that means you're going to then be able to get into a FTSE short trade on an uptick. Oh yes, you're able to get into a short trade on an uptick on the FTSE. You're going to start watching for the tape, you're going to start watching for the book, you're going to start taking advantage of any upticks if you're starting to see the trade. Now that's if you're starting to see the trade. The trade values, to me, see it still seems to be selling sterling at top edges, not FTSE. So that's where the better opportunity kind of resides up here. And depending upon what happens next, you can start to look forward to the sell on the FTSE working out, because obviously if the cable goes up but the yield stays down and the S&P stays down, then we could obviously start thinking that there's going to be a quick flip over on the FTSE, and therefore a short FTSE, short sterling trade actually makes a fair case, but you've got to therefore get the directionality right if you're going to do that trade. As I said, we've chatted about oil. We've chatted about oil. We talked about the short. We talked about the short CAD yen. Well, the short CAD yen had a second opportunity to sell. I don't know if anybody took the short CAD yen this time round. But the short CAD yen took another opportunity just up here. We talked about that trade this morning, actually, the CAD yen, but we talked about it from this sell. This was not an oil sell here. This was a CAD yen sell for 15 pips. And we'd been short oil here, but we lost the oil because of the CAD yen, and we started to regain the CAD yen, but we didn't have the oil through to the top edges. We talked about structure. We talked about the measured moves. We talked about target prices. And you might be surprised to know that this sell trade that I took on oil that never made very much was perfect. It was right into a big target price for buyers, and we had value in the background for the sell to come in. It was into a perfect little buy target price, and we got a response. Not a great response, but that's because the value moved up as we were in the short trade. And that's why we still make money, because the profit takers are still in the deal. They're still in the deal. But when we got a higher high here, the selling absorption on oil was giving us an idea that there was possibly going to be a sell trade on something like Aussie CAD, which is exactly what just happened. We saw the sell trade coming into Aussie CAD itself, and there's the outcome. Bada bum, bada bing. Sorry guys, I've got a FTSE short trade and I'm making some money on it, so I'm just putting my stops in at break even whilst I'm this is. Good. Right, we're in good shape. So the FTSE short was a half-back sell, and we sold into it, of course, surprisingly enough. Well, you can get volume, Kuba, if you've got the likes of the Aussie or the yen, because you can still see the Aussie yen volumes coming in, and you can still drill down into their tape order flow. If you're on the CME, for example, you can still get their tape order flow for the C contract, the J contract, and the A contract. So you can still see the block trades, you can still see the leans, but you know, inside of the software package, I don't know, does David's software package pick up volume blocks regardless? It's not an order flow block, it's a volume block. I don't know, maybe it does, and in which case then of course there is still those block, or in fact it does, because there's the Forex market here. You can see you can still get block trade alerts. There's the euro dollar, for example. There's a block trade alert at the bottom edge there. You can see that stopped the market moving lower on the euro dollar. So you can see that the block trade alert is still visible on the forex markets. So you can actually use those as leans the same way as you would use a delta lean that you get on MZ pack, for example, as a delta lean. You get a big sell delta or a big buy delta getting trapped. Then you can get that delta lean, but that's still a volume lean as well. And there's the volume lean that you get on the euro dollar, which you can try and obviously fine tune down into your CAD yen or your Aussie yen to find the same thing. So you're wanting that same kind of block trade. Now, if you've got access to the really, really short-term time frames, you'll still be able to find those leans. You'll still be able to find those leans on the charts because there's various spike indicators on TradingView. So, for example, if I'm looking at CAD yen as against oil, you have to have the CAD yen, of course, as your main timing chart, your baseline chart here. So if you're looking at CAD yen here, if I take you down into, for example, a 1 minute chart, you can start looking for the decline in volumes and then the spikes. So you can start looking for those types of ideas. You can start looking for the shape of this. You can start trying to time them against these volume stories. And it's got the same concept as exact same concept as things like time segmented volume. So if I added an indicator to this and I added TSV into this, you can start watching TSV. You can start adjusting the timing of it so that it's a little bit more receptive, bring it down a little bit into the lower time frames, get rid of the moving average, do whatever you like, but you can still use it for your divergence purposes. And you know, when you're looking at time segmented volume, you're obviously demanding that the market has a divergence. Now remember, this doesn't have to be a histogram. You can get rid of this histogram and change it to simply a divergent line. And that's what happens. You can start seeing volume divergence. You see that? You start seeing this more as volume divergence, just the same way as you would see volume divergence creeping into things like the OBVs, for example. So you can start seeing things like volume divergence creeping in here as well. So you can try and say, well, when we've got volume divergence, when I've got volume divergence up here, what I now need to see is I now need to see a block seller to lean against. I now want to see a block seller to lean against in that area. And obviously that's up to you to then find that block seller, but you're obviously, if you drill down into lower time frame charts, for example, into that narrative, you can start looking for that block seller into those areas, can't you? You can start watching for the block seller as that volume divergence diverges, and you can start hunting for that top edge. As you drill down into the lower time frames, it becomes more and more specific to the price, doesn't it? There's the highest high there. And you can see that that's giving you an accuracy of about 2 ticks. You see the drawdown on that divergence there was a maximum of 2 ticks. So you can trade those highs at that stage. Once you've got the bigger picture divergence, you then drill down into the 15-second divergence to find the top edge. Now, obviously, this is going to be based upon the oil as a value chart. So if we go back up into that 1 minute narrative there, we go back up into that 1 minute narrative, the volume needs to agree with oil. So when we compare that to the CL contract, for example, when we compare that to the CL contract, it should be the same line, shouldn't it? They should be telling us the same piece of evidence for that sell trade on CAD yen. So there's the same evidence. Do you see it? So for example, I could argue quite clearly, I could argue that there was a possible buy trade into this pullback here because we've got divergence creeping in here and we've got divergence creeping in here. So what would I need to see on this candle? I'd start to need to see on a lower time frame, I'd need to see that volume coming off that down candle into a buy trade. Into the top edge, I can see that value dropping. I can see this value dropping. So on this move higher, I would need to see the same thing. I'd need to see that short-term divergence coming into that move there. So that's what that's what you'd hunt for. So you'd go down into the 15-second chart. You'd start demanding to see the value divergences into those areas, and that's where you start looking. So you can see, for example, into the bottom edge here, there was no value divergence on this downtick. The volume was still coming in, but you could have started to pick up maybe this trade here. It's not bottom ticking it, but you could certainly have picked up the trade maybe in there because you're not that far off the bottom edge. You're only a couple of ticks off the bottom edge. So you could have bought into that storyline at that stage. And then obviously when you come up into the top edge, as I've just shown you, there was a value divergence on these two green candles. You could just have put in sell limits on your CAD yen and you get a very, very good response off of those sell limits on the way back out of that trade. So that would have been the two trades that you would have had on this market so far today on CAD yen. Those would have been the two trades you would have had. So a very, very good buy trade, a very, very reasonable sell trade as well. You can see it's went from 87.78 up to a high price of 87.93s, and then 87.93s. It's now sold off the way back down to 64.65 again. So you don't need to see the order flow so long as you see the volumes, so long as you see the volume diverging, so long as you see the ideas, and then being able to drill down into the lower time frames to time it a little bit better. And then start putting in your sell orders. Start putting in your sell orders when you get that multiple time frame divergence creeping in. It's the same way, but obviously the other way is to just add the block volumes in as well. And obviously if you add in the block volumes, you're going to start watching. Now, there is hold on a second. That gold, by the way, guys, just went 94 up to 04, so well done anybody that's just picked up a full 1,000 on the measure. A brilliant trade, guys, a full $1,000 on the measure, so well done all you gold lovelies. You have had an absolute ripper. Remember, the measure came from 94, Paul, so the target's 04. It doesn't matter whether it's not $1,000 for you, it's $1,000 for a swing. It's $1,000 for a swing, remember, is what you've got to be aware that there's going to be profit takers pouring into to try and get out of that bit of business. And you can see that that's pretty close to almost perfect for a measure as well in terms of a directional measure. So great trade, love it, love your stuff. You've made your money today and you should obviously just chill out just a little bit.